Hey, good morning everybody. It's Brian. Hope you're doing well this morning. It's Thursday, the 3rd of September, and here for our live updates. I'm going to keep it pretty quick. I think I'm going to even skip, kind of looking over here. I was going to say I might skip the forex stuff, but I think I'm going to hit it anyway because there's some interesting opportunities developing. So let's go ahead and get into it. First things first, you guys always want to be able to be sure to check the news to know what's coming up for the day so that you don't either A, jump into something right ahead of a big news announcement, B, don't get caught up in the chop that occurs on the news announcement, and C, get caught in the exuberance in the moments right after the news announcement. So it's important to know what's coming up. So this morning, fairly light. I mean, we do have some more medium impact stuff for the employment claims, but the big news is tomorrow. Tomorrow is the non-farm payroll report. That's the biggie. We did see a bit of a blip yesterday after the ADP numbers came out, and the market digested that. But I think Friday. Friday, I shouldn't even say I think. Friday is the big day. Friday is the big day where non-farm payroll, the official numbers come out, and the unemployment rate comes out. So that'll be a biggie. Today, we do have the manufacturing report that's coming out at 9. See where that goes. Yesterday, go back, yeah. Yesterday we had some factory orders that came in, and those were actually pretty positive, and so this might actually be positive as well, but it doesn't really matter. Like I've said before, we don't concern yourself with the outcome of the reports. I found it to be fairly freeing when I stopped trying to chase whatever the report said and make a decision. Just let the market make the decision for you. All right, just let the market do what the market's going to do, and then you follow along. You're going to find it much more calming to not worry about what it, quote, should be doing. All right, forex. Let's talk about forex over here. What's happening? Well, we've got some decent things that seem to be setting up. We've got a strong euro coming into the start of the new U.S. session. To the U.S. forex session just began 3 minutes ago. So as the session gets underway, we can see that leading up to now, we've had the euro push into strength. We've got a couple of currencies that are on the radar for us. The CAD's been flat but below the midpoint, and the yen has been fairly flat but also below the midpoint. It's been a weaker currency. So looking at those, euro versus the CAD, euro versus the yen, definitely some opportunity there. When we look at the lineup on these over here on the actual charts, we can see that the euro push into strength. It's kind of been a nice intraday move. Little intraday trend here. Looking at the current day's range, we've moved about 60 pips. The average is closer to 90 to 100. So is there opportunity if we break to the top of that box this morning to go another 20 pips? And I feel like the answer is yes. If it does get some momentum behind it and pushes through, then yeah, we can certainly move on. The volume detail is supporting that move as well. We've got the volume seems to be supporting the buy side here. So that move could certainly be interesting for us if it does push on. Same with the euro yen. The euro yen is about the same range. Typically the euro yen is 90 to 100 pips. We've moved 64, and so if it breaks to the top of that, it could certainly keep going. One caveat here right now is the volume detail seems to be supporting selling on that euro yen. The other thing with it, and I've talked about this before, is we want to trade currencies that are more active during the time that we're trading, and this is everything, by the way. This isn't just with currencies. This is with crypto. It's going to be more active at certain times of the day than others. Futures, certain markets are going to be more active during certain times of the day than others. It's important to trade during times when you've got that volatility and you've got the market participants there. So think about who we're trading. Euro CAD right now, at the start of the U.S. session, both of those economies are open. you know, both are moving. Both have got banks that are making decisions. Both have market makers that are working, and you know, the large players are in, you know, in the office doing what they're going to do. Euro yen, euro's open, but the yen's not. It's still being traded, of course, but it's not, the yen's not going to be as actively traded as it would be during the start of the European session, or especially during the start of the Australasian session. So I'd prefer, you know, looking at two, you know, if we've got two opportunities here, just kind of looking at what's out there, I would say that the Euro CAD would be the better pairing. You know, just having to pick. So check, you know, so you might watch that for that breakout. Anything else over here that really jumps off the page at us? I don't really see any others that are jumping out. Pound CAD, you know, both are below the midpoint. So we would have to have something occur here where the CAD really started moving to strength in order to be able to play that pound CAD. Or vice versa, or maybe the pound just suddenly starts shooting up. I think the better play though would be that Euro CAD. Yeah, so we'll leave it at that. Okay, so switching gears, we're going to pop over to the other screen. We're going to grab this screen over here, and we're going to talk real quickly about the S&P, crude, and gold. So yesterday started off the day with this big red bar right here, shortly after the news came out, and this was a tough day for a lot of people, because a lot of people got short, going, this is hallelujah, this is the day it comes, we're finally going to go short. All the short sellers are rejoicing. It was a tough day for folks that didn't have a plan, or it was a tough day for folks that had a plan but didn't follow their plan, right? Because they started thinking that they're smarter than the market, which very often happens. You know, I've said before, we see this kind of parabolic curve on what the S&P has been doing over the last 4 months. It's just been basically straight up. It's ridiculous, and you know, everyone feels like there's a day of reckoning coming. It's dangerous to call the tops, guys. It really is. It's so dangerous to keep calling the tops. I've mentioned before, it's like a freight train that's moving. You don't want to jump out in front of it unless you've got a really good idea that it's planning to stop there. And you know, nothing wrong with contrarian trades. Just be prepared to be prepared. And that's for every trade. You should always be prepared to be wrong. But a lot of folks that are trading with emotion may have thrown their plans out the window yesterday when they saw that big push down, and jumped in short and then got blown out later in the day. So let's talk about that. So we've got, you know, new highs, pushed to new highs yesterday, pulling back off of those new highs today. We've got a key number here at 35.50, which I haven't even marked yet, but we've got a key number up here at 35.50, big hole number. So certainly looking at that as an area of support again for us. Then of course we've also got some areas right down here at the 35.40 range, 35.35, 35.40, and then down here at the 35.20. But 35.50, if we do pull back here, certainly would be a spot to look for potential retests. The bias is long. The bias is long. Don't be fooled by it. You know, the 30-minute bias is long. The 4-hour bias is long. Nothing wrong with having an opinion about the market, but we don't trade our opinions for consistency. We trade a plan for consistency, and that's really important to point out. So, you know, we could watch for pullbacks and see if we pull back down here to 35.50 if you're a bounce style trader, or, you know, use that intraday method that we talk about where we just wait for price to keep making lower highs and lower lows, and then, you know, play a breakout of that previously closed lower high, and let the market momentum work for you in the direction of the bias, and without trying to call a bottom. Let the market start to reverse and then play into it. That's what that does for us, playing that entry off the top of the previously closed candle. So a couple ways to look at it there. As far as just straight breakout trades, you know, it's just a straight breakout. If we got some momentum and break back above 35.80, that could be a point to just look at going long. But I would certainly, watch for price to continue making lower highs and lower lows, and then play the break of that. Now, if something occurs today and price just really falls off and pushes lower, watch for our moving averages to cross. I mean, if it keeps pulling back, and the 30-minute moving average crosses, then at that point you're going to stay out of the trade, because it's not going to give you a viable entry. At that point, the biases would be mixed. All right. Moving over to crude. Crude went off a cliff yesterday, and we've got the bias on crude now is short. So the 4-hour is short, 30-minute is short. So what does that mean to us? Well, it means that we'd start looking for pullbacks. We'd start looking for pullbacks here to see if this pulls back up towards a key level. What are our key levels? 4,200, 4,150 would be the 4,200. 42 or 40. Can you imagine a $4,200 oil? Oh my gosh. Yeah. So big whole number. 42. It's been we mentioned before, the market had just been kind of sideways between 42 and 43 for quite a while, and it had just been kind of hanging out right there. And we can just go back. We can see it just hanging between 42 and 43. So it broke through 42, retested it, and then pushed on, but it hasn't retested on a larger level. So it'd be interesting to see if we did pull back to 42. That could be a spot to sell off of. Otherwise, the plan, if you're trading an intraday plan, would be watch for the 30-minute candle to start making higher highs and higher lows. So that means we're pulling back. We're going like we are right now. We're making a higher high or a higher low. We didn't have a higher high yet from that candle, but we want to see, so this one, higher low, higher high, the next candle, higher low, higher high, and then play a breakout at the bottom of that previously closed higher low to see if we can't get filled on some momentum back in the direction of that trend. But the trend here, the bias is short on crude. Same on gold. The gold is the gold. I say the sometimes. Anyway, gold has flipped over on us as well. We've got the 4-hour here on gold has crossed. Remember, I said there's nothing subjective about this at all. It either is or it isn't. In this case, we've crossed. The green has crossed the red. That tells us that we've got a short bias on gold. So gold is looking short again. 30-minute is short as well. So we'd be looking for potential selling opportunities on gold. So we continue to look short on gold. I have a lot of trouble with that. I'm as I mentioned before, I'm kind of a gold bug. Plus, here we are sitting at 1940, which is a big level for gold, even down to 1930. But this is kind of the top edge of that support area down here. So we certainly could see a potential bounce and have this thing move back up. If it does, especially if we get a good solid move back up, that's not going to key you into your short trade, so you wouldn't be in it. And if it does move back up with a lot of strength, we'd see our 30-minute moving average cross over here back into the long territory, which would tell you, hey, let's sit on the sidelines because we've got a conflicting bias. But for right now, all signs are pointing to a short on gold, which is telling us that's the direction of the bias here would be short. So we'd be looking for pullbacks. Again, same thing as with crude. We'd be wanting to see this make higher lows and higher highs on the previously closed candles, and then trade a breakout as it gets some momentum pushing back through that previously closed lower high. So back to the downside here. Could also play a bounce, if price pulls back to this 1950 area, 1940, 1950. We're at 1940 right now. I mean, it's tough. You could also be looking for shorts off of 1950. So I'd prefer to let the market dictate it though, which is that pullback process, and then enter as price breaks through. Let's have a look at how that looked yesterday using the indicator. Let's pop over here and just have a look at the indicator itself that we've been utilizing. Using the indicator on the S&P, you didn't get caught in to those early morning movements here. that first part of the day, there's a lot of chop. I look at these really after the first hour. I let the first hour just typically a lot of noise. And then after the first hour, we can start watching. And we saw that same breakthrough here, broke through, made lower. This one, in this case, lower high, lower low, lower high, lower low, pulled back, broke through the top of that, and then we can see how price moved on. Same with the Nasdaq, did the same, kept us out of crude, kept us out of gold as the markets flipped around on us. So it's all about having a plan, having something you can implement consistently every day. We're going to do more on the indicator. I talked about the indicator on Tuesday at the multi-speaker event that I spoke at, and there's a separate breakout room that we're going to start going in beginning next week, where we'll be talking about the indicator, how to use it, how to customize it a bit for different trading plans. I'll talk about it here as well, but like I've said before, I need to I keep procrastinating. I need to make this page private so that I respect the terms of the agreement that I have with my friends that are helping me publish that indicator. So the folks that are on, as we've said before, the folks that are in here and on here right now and watching these things, my commitment up front was I'd give you my stuff. If you're a part of Make Money from Your Laptop, I'll give you my stuff. So just message me and let me know what your trading view is, and you get it. But I'm going to lock this down because I'm not going to talk about the indicator anymore here. Going forward, it's going to be under a private piece. And those that are in here now will still get it, but anyone that comes after the way, it's going to be locked down. And I've said that for weeks now. I've just procrastinated about making it actually happen. So that's mainly because it takes some effort, and I'm in that spot where I just, I can do what's easy. Anyway, I'm going to leave it here, let you guys get on with it. Just have another quick look at what's going on before we get moving. It looks like the S&P is doing a little bit of a push. Again, this morning shorter. You're going to see in the coming days, I can pretty much guarantee it, a lot of the short talk becoming more and more and more prevalent. And it'll be interesting to see what really happens there. You're going to have, especially if the market does flip tomorrow after non-farm payroll, keep in mind, for the 4 hour to move, for the 4 hour to flip over, we could still have a pretty, what looks like a big pullback, and have it not really mean too much before the 4 hour flips. So there might be a few days before, if we do start pulling back and the 30-minute changes, it might be a few days before the 4 hour comes into alignment with that. I mean, it would have to come back down, really to around 3,400-ish, 3,450 maybe, in order for the 4 hour bias to be short. So don't get too caught up in these little moves as the market pulls back and ebbs and flows. There is going to be some chop typically leading up to non-farm payroll. So I wouldn't be too surprised if we saw the market pull back a little more, but do keep in mind the bias is still long. You've got to trade what the market's telling you, not your emotions. But yeah, you're going to see a lot about the short guy, the short seller folks are going to start popping back up. They've been wrong since 3,000. They've been wrong a lot, so they've been pretty quiet. But they're going to start coming back up. And if the market does flip, you're going to see a whole bunch of programs being sold with, see, I told you this was going to happen. They're not going to tell you about the 4 months they were wrong every damn day. But if this does roll over, you're going to see a whole bunch of advertisements for getting short and getting behind these people that called it and yada, yada, yada. Don't buy into the bullshit. So I just want to forewarn you on that. So anyway, that's it. Have a great day, and I will talk to you soon. Bye.